So let's have a look at what a trader's job is. Now, the vast majority of traders who will be asked this question, including me up until many years ago, would have answered that our job is to make profit or to make pips every day or every week or every month, depending on how frequently we trade. Which is kind of the case, but the real job of a trader is not to make money, it's to manage an account. So whatever you start with, whether it be your money, whether it be a prop firm's money, or whether you be investing for somebody else, in which case I would hope that you know the answer to this question already, would be that your job is to take risk. Because regardless of what your targets are from a profit point of view or from a pip point of view, you need to be making sure that every trade you take is managing your risk correctly. Risk is more important, and concentrating on risk is more important than concentrating on profit or concentrating on pips. Because profit comes from managing your risk properly and using the correct risk-reward ratio for your strategy. Okay, so you need to develop a statistical edge and understand the probabilities of your strategy, of your system, in order to put the odds in your favour and make sure that your system is able to achieve the targets that you want to achieve as a trader. So I liken trading to a casino. A casino has an edge over you as soon as you walk in that door. So when you play blackjack or you play roulette, they know that their edge is going to make sure they've got a 0.5% to a 1% chance of winning money. You are going to lose money. They know that when you walk in the door. That's why casinos exist. That's why Las Vegas exists, and they make an absolute fortune. So our job as traders is to take risk, but with a strategy that we know has an edge. Now, the strike rate of your strategy is irrelevant. And the problem we have as traders is we are always out there looking for this holy grail, which doesn't exist. And the holy grail is a strategy that is right X% of the time and has a consistent profitability every single month. And it's just not the case in trading. The market will give you what it gives you, and your strike rate will not be the same every month. So what we need to do is we need to look at the strike rate of a system, a worst case scenario and a best case scenario, and make sure it's going to meet our financial needs. Okay, so what I'm going to do is I'm going to quickly take you through a spreadsheet that I have, which is basically, it's going to show you the importance of risk to reward over strike rate. It's going to show you that you can control risk to reward, but you cannot control the strike rate of your system. Okay, and I'm also going to show you how difficult it is to meet your financial goals as a new trader, and what kind of balance you're going to need as a trader to actually make money in this market. So let's say, for example, we have a profit target each month of making $5,000, right? So $5,000 is, it's a decent amount of money. It's going to be able to pay your mortgage, pay your bills, pay your food. Some people will need less than that. Some people will need more than that. It all depends where you live and what your lifestyle is. But at the end of the day, we've got to set a target. So let's say 5,000 is a reasonable target that we want to make on a monthly basis. Now, in order to make that 5,000, we need to know roughly what the strike rate of our strategy is likely to be. But what we don't know is what it's going to be this month, what it's going to be next month, or the month after that. If we've back-tested a strategy, or we know for a fact that other people are achieving a certain strike rate with a strategy that has a fixed set of rules, then we can use that as a guesstimate of whereabouts we should be looking from a strike rate perspective on our strategy. But strategy, strike rate, is something that we do not have control over. There is no system out there that every single month will return a 57% strike rate, for example. Some months it might return 43%, Some months it might get on the right side all the time and you might be returning 80%. The next month it might just pull in 50%. We don't know. But what we need to know is what the minimum our strike rate of our system has to achieve for us to break even or get close to meeting our profit targets that we've set ourselves. Okay, so one thing that we can control with any system is our risk to reward ratio. Okay, and this is why I want you to stop concentrating on strike rate and start concentrating on risk reward. Okay, the strike rate isn't something we can control. The market is going to go where the market's going to go, and when we press that buy or sell button, we've no idea whether it's going to be a winner or a loser. What we can control is when we take a risk in the market, what the potential reward is going to be for our trade. Okay, so if we have a market that is moving in a nice trend and we get a pullback to a level here and we're interested in taking a long, we know that we can set our stop loss here and we can risk, let's say £100, $100 or 100, whatever your currency is. We know that we can set a risk to reward ratio that is going to return us 200 if it gets to a specific level. Okay, what we don't know is what price is going to do, whether or not it's going to stop us out or it's going to hit our target. Okay, but what we can control when we take a trade is where we set our TP and where we set our stop loss. We cannot control whether that trade is going to be a winner or a loser. Okay, so risk reward is incredibly important, and I'm going to show you now what you're going to need to set as a risk to reward based on a strike rate. We're just going to go through a few examples, and we're going to use a starting balance that's realistic, and then we're going to use a starting balance that's unrealistic, just to show you what you can achieve and what you're going to need to achieve to hit those goals. So let's say as a new trader, you've been trading for what, 3 months, 6 months, maybe a year, and you're saying, right, okay, I want to jack in the day job, I've got to make $5,000 a month, so I'm going to take $5,000 of my own money, stick it in a trading account, risk 1% on every trade. I'm going to take 30 trades a month because I'm working a day job, so I can only swing trade. I'm going to take trades in the evening. I'm going to take roughly 1 trade, maybe 2 trades a day. Okay, so we're going to be risking $50 a trade. We've got a pretty average system. We're looking at a strike rate somewhere in the region of 40 to 70%. I know this is achievable. I achieve this on a regular basis. Very rarely below 40, but it's somewhere in that region most of the time. We've had bigger months, but that's the average, okay? So with our $5,000 starting balance, risking 1% per trade, we're looking to make $5,000 a month. So if I want to achieve that, what have I got to be using as my risk reward? In this case, you can just about get it near enough if you've got a 5 to 1 risk reward. Okay. Now, to be able to achieve that risk reward ratio, you're going to have to sit through that trade for an incredibly long amount of time. We know that the market, when we enter a trade, so let's say we take a trade here, we set our stop loss here, and we set our TP up here at 5 to 1, we know that when we enter our trade, price is going to do this. We don't know where it's going. It's going to go up and down, but what we hope it's going to do is not hit our stop loss, and it's going to hit our TP. What we want to happen as traders when we take a trade is price is going to do this. But it doesn't. That never happens. Price never moves in a straight line up to our TP and just says, hey guys, here's your money. It doesn't. It chops around and it teases us by getting to a nice level and you're thinking, yeah, this is a good trade. Oh my God, it's getting better, we're nearly there. We're over halfway towards our TP and then suddenly it crashes back down and it pulls back a little bit and it crashes down. Now you're in drawdown. Now it drawdowns even further. Then it comes back up to here and you're like, oh, I'm panicking, I'm gonna cash out. Okay, I nearly lost the money. I'm just gonna take this. I'm gonna take my 1.5 to 1. Okay, that's what happens in realistic terms, because your psychology and your ability to hold a trade and forget a trade once you press that button doesn't exist as a trader. I do it, you do it, everybody does it. So achieving this 5 to 1 risk reward ratio is very, very, very difficult. So what would be easier would be to set our goals at a level which are going to get hit faster, have more chance of being hit, and also stop us psychologically wanting to take that money off the table when it's getting close to our targets, or we see it going back the other way. So somewhere in that region is where we should be realistically trying to set our expectations for a risk reward ratio, for our TPs. Okay. Now, if we're hitting 40 to 70%, you can see the maximum we're going to make a month is 1650, but we could be breaking even. Yeah. So what's the worst can happen? We get another month's experience under our belt if we have a poor strike rate month and we don't lose any money. But at best we make 1650. Now that's not going to pay the bills. So this 5,000 is no good. So what could we do? Well, we could risk more. If we take a 2% risk, we're still not hitting. So, well, what we could do is we could go 3%. Let's risk 3% every trade. Now, all of a sudden, on a 2 to 1, with a very high strike rate for the month, I can make what I need to pay the bills. But if we don't have a good month, I'm still going to make 900. That's not bad. But the problem is you're risking 3% on every trade. Now I want to show you what happens in the real world. Okay, with a 2 to 1 risk reward risking 3% and a starting balance of 5,000, this is what's going to happen to our trades. Okay, if we have a 50% strike rate in a month, okay, we're looking to make 300 on a winner and lose 150 on a loser, right? So we're going to go into drawdown because we lost 2 trades on the trot, 4-7. Then we're going to make some back because we've got 2 to 1 risk reward. So we're back to where we were. We're going to lose some, we're going to win. We're going to come back to where we were. We're going to lose again, we're going to edge into profit. The problem is we're a third of the way into the month and we've not made any money. Psychologically, that is going to be really, really drilling down on you. And you're going to be saying to yourself, this system doesn't work. I get the odd winner, but most of the time it loses. And let's say, for example, you have a really bad start to the month and you have 5 losers, 6 losers on the trot. What are you going to do? You're going to take that massive hit and just walk away? You're going to do something drastic. You're going to go full tilt. You're going to double this. You're going to go, oh, this is ridiculous. Let's try 5%. Oh no, it got even worse. You know, it's just not realistic. So what we've got to do is we've got to make sure that when we're taking a trade, we're being realistic with our risk and our reward ratios, okay? Okay. Now, if you're risking 0.5%, you're not going to hit your target with a 5,000 account, okay? And that's only with a 1.5 risk reward and a 53% strike rate. Yeah, you see that. So what do we need to do if we realistically want to make $5,000 a month? We need to start with a bigger bank balance. Okay, so let's go 25,000 and we'll risk 0.5% per trade. Okay, you can see here with 0.5% a trade and a 1.5 to 2 risk reward, we're still not quite where we want to be. So the temptation is to go with a 1% risk, and that's acceptable for most systems and you will be comfortable with that. But be aware, you could make no money or 8.25, each month. So it's not guaranteed that you're actually going to have a profitable month. Another thing you can do is you can overtrade. Whoa, look at that. Now we're talking somewhere between 40 to 70%. We're now looking at making something between $0, $16,500 with a 25k account. So we're just going to take more trades. Yeah? Let's do that. Let's overtrade. The problem with overtrading is you need to trade more instruments. The more instruments you trade, the more of a losing run you will see before you get your winning run. Okay, so you're going to go into big drawdown. It's going to be painful for quite a while. In this case, half the month we spent in drawdown with no profit. Then we finally got a winning run off to make some money. So to make $5,000 a month is very, very, very difficult unless you've got a very big bank balance. The best thing you can do is go off and find a prop firm to fund you. And that way you're going to get access to some serious capital very quickly in your trading career. Now there's a lot of prop firms out there. The prop firm that I trade with and quite a few other traders trade with is called FTMO. And one of the reasons FTMO is so popular with traders is because they have a fairly realistic challenge procedure to go through, where you are trading a demo account with them and they will set targets for you to hit from a daily risk and loss perspective and a monthly profit target perspective. So you're going to have rules and restrictions which you have to trade in. So your trading style has to work as a day trader. This doesn't work for swing traders, and one of the reasons is you're not allowed to hold positions over the weekends. So that's probably the best way to make money, is to try and get yourself funded with a prop firm who will put you through a verification process. Once you've proven that you can profitably make money over a period of a few weeks, they'll take you through a verification process again that will verify that you can do what you did in the first challenge that they set you, and then you get a live account to trade, but you've still got daily targets, profit, loss, and maximum loss targets that cannot be exceeded, otherwise you'll lose the account. But that's the only way you're going to get your hands on, most traders, a big enough amount of money to actually make it in this industry. Okay, so let's have a look at a 1% risk reward ratio with a $50,000 account, and let's say we're achieving again between the 40 and 70 mark. Okay, so now you can see that it becomes much more realistic over a period of time to hit these targets. If you were to set 1.5 to 1 risk reward, some months realistically you're probably going to be putting 10k, 11k. Other months you might break even, but as an average we're looking at somewhere around $6,000 at a 1.5 risk reward ratio. There's not many systems out there that can't achieve a 1.5% risk, 1.5 times risk reward ratio. Okay, at somewhere around 40 to 70%. So you can see that this is the area that you can control. This is what you can control, and this is what you can't control. This is a range that is going to happen. This is something that you can set yourself. Okay. So our job as a trader is to take risk. We know that, and we can control the risk that we take. And that risk that we take should be based on how often we're going to trade, what our profit targets are going to be, and what the expected outcome or strike rate of our system is going to be. Now, if you're a new trader and you don't, or you're using a new system for the first time that you've not back tested and you don't know what the strike rate is, for safety's sake, head for 50%. All right, because on a 50% strike rate with a 1.5 risk reward and a 1% risk, virtually any system is going to come out as a winner at some point. The problem you're going to have is you may experience very large drawdown. Okay, if you get a load of losing trades in a row. Okay, and that's the only problem you're going to have with a prop firm like FTMO is you have got a maximum loss limit. So you've got to hope that the losses that you're going to achieve are going to be spread over a reasonable amount of time. Okay, I'll put this spreadsheet up on the website so you can download it and have a play around with it yourself, but just get used to expectations in trading and realize that it's not something you can just jump into with $1,000, risk 5% of your account on, and suddenly make an absolute fortune. It happens. I've seen people do it. I've seen people take 10 trades in a row and get 10 winners. But they are few and far between. And eventually they'll get 5 losers in a row, go tilt and blow their account. Okay, so I hope that was helpful. Your job as a trader is to manage risk. Okay, so stop concentrating on profit, stop concentrating on pips, concentrate on a solid risk reward strategy with your system, and just make sure you know what the rough strike rate is likely to be on it so that you can calculate what your expected returns are going to be with the system.